The European Union's agreement to provide a €90 billion loan to Ukraine marks a significant escalation in the bloc's financial commitment to the country amidst its ongoing conflict with Russia. This decision, arriving after earlier proposals to leverage frozen Russian assets faltered, underscores the EU's determination to sustain Ukraine's resistance and maintain its economic stability. The sheer scale of the loan, envisioned as interest-free, highlights the severity of Ukraine's financial predicament and the EU's willingness to absorb substantial financial risk. The core impetus behind this financial package is multifaceted. Primarily, it addresses the immediate need to bolster Ukraine's military capabilities as the conflict with Russia continues to be protracted and resource-intensive. Beyond military needs, the loan is designed to sustain essential government functions, including paying salaries, pensions, and providing vital social services. This dual objective reflects the understanding within the EU that a functioning economy and a stable society are critical for Ukraine's long-term resistance and eventual reconstruction. Understanding the context requires a brief historical review. Since the onset of the conflict, the EU has provided Ukraine with significant financial assistance, initially in the form of grants and smaller loans. However, as the war has dragged on, the scale of financial need has grown exponentially, demanding a more robust and sustainable funding mechanism. The initial proposal to use frozen Russian assets, estimated to be worth hundreds of billions of euros, was intended as a way to finance Ukraine's reconstruction without further burdening EU taxpayers. However, legal and political complexities surrounding the seizure and repurposing of these assets have proven insurmountable in the short term, leading to the adoption of this large-scale loan package. The decision to provide the loan comes with potential ramifications for the EU itself. The sheer size of the loan will inevitably impact national budgets and potentially affect the EU's ability to finance other priorities. The commitment also represents a long-term political pledge to Ukraine, potentially shaping the EU's relationship with the country for years to come. From a geopolitical perspective, this move sends a clear signal to Russia regarding the EU's unwavering support for Ukraine. It reinforces the message that the EU is prepared to invest heavily in Ukraine's sovereignty and territorial integrity. However, it may also escalate tensions with Russia, who might view this as further evidence of Western interference in its sphere of influence. The EU's decision to proceed with the loan, despite the hurdles faced in accessing frozen Russian assets, demonstrates its commitment to Ukraine's survival. It also sets the stage for a prolonged period of financial and political engagement, with the EU likely to play a central role in Ukraine's reconstruction effort.